Hello, everybody. Peter Murphy and Chase Clark here with the Buying Tampa Bay podcast. Today, we're interviewing Keyanna Jacobs, which is actually Keyanna Mrs. Real Estate Jacobs from the heading on her picture. So Keyanna is a realtor with Berkshire Hathaway Home Services, where she works with investors who are acquiring real estate for long-term investments, as well as short-term vacation rentals. The other half of her business focuses on owner-occupied buyers, anywhere from first-time home buyers to the upper middle end of the home market, which I used to say was the high end of the home market. It's like $1 million or so, but now that's like the cost of a high-end middle-tier home in Tampa. So that's amazing how far that's come. Anyway, Keyanna spends a lot of her time educating buyers in the housing market, and we worked right alongside Keyanna at a prior company, so we're familiar with her passion for real estate and her work ethic. And we thought it would be great to get a perspective of another realtor and how she sees the housing market right now, because it's not an easy picture to coalesce, and the different parts of it don't always seem to converge nicely. Do they, Chase?
No, that's right. Good morning, everybody. And I can't even tell you how many times in a given week someone asks me for my crystal ball predictions about where the market's going and what's going to happen. You know, and you've got all these different things going on right now. You've got the stock market near record highs. You've got interest rates on the rise and kind of teetering up and down in that, mid-6 range. Yet we've got strong buyer demand in this area and a lack of supply. And so how do you merge all those things together to figure out, okay, where's the housing market going? Are prices still rising? Are they going to fall? Are we going to have a crash, right? I mean, that's the question everybody wants to know is, hey, is there going to be an opportunity for me to buy something at 30% below what it is today? And, we have a perspective on that we've shared with you. But Keyanna, welcome to the show. We're looking forward to hear all about what you're seeing out there in the market and what your clients are telling you.
Hi, I'm Realtor Keyanna J. As you said, Miss Real Estate. I think I am real estate. I like to try to get in all parts of it. This conversation is extremely interesting to me because I am out in the field daily talking to people, and you are right, Chase. The first thing they want to know is, what do you think is going to happen with interest rates, right? We're like a interest rate stalker to see. And also, some people are banking on there being a crash. And I personally don't think that's going to happen in the way that everyone is anticipating. So those buyers that are waiting, could be waiting for a very long time. Of course, the demand is a big driver of the market, but if you look at certain price points, I mean, if you're under 300,000, those homes are flying even more in multiple offer situations. But when I'm looking at things that are like 450 to 550, they're staying on the market a little bit longer. They're not moving as fast as one would think when you're looking at other price points. So it's a very interesting market to be in right now.
It seems like such a perverse thing, right? That like people seem to delight in the idea that we're going to have another real estate market crash, don't they? I mean, that's so what is the human nature in that makes us all want something bad to happen in the housing market right now? Like it's going to be something great for us all, which is not, right?
Well, I think that we have become a people of deals, right? When you traditionally think about the housing market in Florida, that was the place that investors would come to get a good deal. They could invest in Florida. We're not the small investment place that we used to be. So I think when people look at this area, they're hoping that prices fall because they want to see what was here before. And so many people who didn't purchase when prices were at a good level 3 years ago, they're hoping it goes back. And I don't think Tampa will be back at that type of market. Like you said, our what we considered luxury is no longer luxury. That's you getting a nice home nowadays. That's all that means. You're spending $900,000 on a house, and it could be new. It could be new construction, but you're not getting a huge home sometimes, depending on the area, and that is literally like a medium home.
Yeah, it's a complete paradigm shift, isn't it? For those of us that lived through the boom and the bust of the housing market here in Florida back in from like 2005 to 2012, we rode that roller coaster up, all that excitement, all that energy going into raising prices, to beyond where they should have been now that we know in hindsight. And then the crash and all the investor dollars that came in and all the opportunity that created for us who are in the industry, not only to sell homes for people, but for those of us in property management to build big management portfolios for out-of-town investors who brought their capital in, right? Mm-hmm. And in some ways, industry professionals are thinking, man, a crash wouldn't be too bad, get all these investors to flood their money back into the market, and all this. Right. But if you own a home right now, you don't want to crash. You want to keep that price going up and up and up, probably because you got a big HELOC on your house right now anyway.
Right. It's definitely, in my opinion, I told a guy looking for land the other day, good luck, if you're thinking that, the land value is going to decrease here, because honestly, it's gone up way more than I even expected. I sometimes tell people that I'm just getting over the shock of the change in our market myself. It kind of happened to all of us. I always say it's like we went in the pandemic and we came back out, and we are now in a completely different market here. So I'm even taking that in. But I tell people, you either get in now or you wait a year or two from now, and you really are kicking yourself, because you're not going to get this great deal where they're listing it at 300 and all of a sudden you can go in and make an offer at 200 and they take it. It's not happening.
It would probably make sense for us to, like, as real estate professionals, to try and figure out what would constitute a deal, what would cause a deal to emerge from the market right now, right? Because we all know that 10 years ago, when the deals were like coming hot and heavy, that was on the heels of a complete economic collapse, the glut of foreclosure properties all hitting the market at the same time, which shoved prices down into the trenches. And then we also had just a general wide-scale economic malaise, so that the competition, at least initially, was not great for buying up that property at low prices. So if you were in the sector, you could come in and buy, and you were able to, like, your offers were getting accepted at 30,000, at 50,000 on homes, and that was not unusual. Now, fairly closely after that, there came a high demand for Florida housing. It came from all over the world, and prices began to climb rapidly. But there was a unique set of circumstance that caused depression in home prices. What would be that circumstance now, right? For anyone who's like thinking they might not believe what we just said, and the housing market is actually possibly in for some kind of a price correction. So what would cause home prices to drop to where you would say, hey, this is a deal now, we ought to buy, right? What do you sense would be the catalyst for that? Because we're all looking for what the signs might be, right? Because I would like to buy a deal as well. All our listeners want to buy deals. So what are the signs that a deal market might be on the horizon?
Well, I think the reason that people are anticipating a possible crash is because the economy, right? We're going through all of these different money system changes. I don't see the job market increasing. A lot of people are being laid off. I'm seeing Amazon just did, a pretty good layoff. I think if that type of thing continues to happen and we don't save the economy, rescue the American dollar, all of that, then that could lead us back into it. But I don't see that, I don't see that happening. I don't see so many people being laid off and us having this huge foreclosure situation, because that could happen. Like at one point I was looking at, well, all of these people bought these homes in 2020, 2021 for extremely inflated prices. They're paying 50, 60,000 over asking price. There could come a point, if the economy doesn't pick up, where they're going to become upside down. And then we may see something like that. So I think for me, in my opinion, if the economy does not strengthen, then we may see that.
One interesting thing is, I feel like the economy is kind of still in adjustment mode from COVID, right? We're still trying to figure some stuff out. We've still got some supply chain issues. We've still got some inflation problems, all related to COVID. Here we are, 3 years after the advent of that, trying to still figure out how to get back on track. Yet housing during that time has been so resilient, right? Yeah. Especially here in this market. And, if you just go back to Economics 101 and you look at, well, price is driven by supply and demand, right? we've still got such an amazing amount of people moving into this state, a lot of them settling here in Central Florida between Tampa and Orlando. And we still have only 2 months of housing supply. The builders haven't ramped up. They're not producing enough product to meet the needs of all these people. They don't want to live in these, 4-story apartment complexes going up along Highway 56. They want a house and they can't find one, or they can't afford one, because like you say, the job market is kind of got a ceiling on what people can afford on average in this area right now. And we've got to see upward momentum there before we can have prices go a whole lot higher, probably.
Yeah, if that doesn't happen, I don't think there's going to be a lot of change. I do think if we continue the way we are in this area in Central Florida, especially with the rent prices going so high, I think that's part of what's also continuing to drive the housing market, right? People are looking at $2,500 a month for a 3-bedroom and saying to themselves, I should just buy a house. My mortgage may be less. So I think that's helping, but a lot of them don't have the capital to purchase. So there's a lot of reasons why homes may continue to sit on the market. We may not, and that could help prices go down a bit. If we don't see a lot of that, then they may, keep going up.
It's so interesting because our local association of realtors, you probably saw this, Keyanna, as well, but they put out every month, it's kind of a backward looking report on where the market is. It looks back, so it's April now. It probably looked back starting at the report that came out. It hit my desk probably for March data. And it reported, of course, that home prices are up 3% from last year. And so you look at all the Fed action that's been going on over the last 12 months, 18 months to help bring inflation into check. And what we've seen is this ongoing increase in home values within our greater market area, which, for us includes pretty much all of Central Florida. That's the Tampa Bay area, the Orlando area, north as far as Ocala and Marion County. So it's very broad. And there's lots of room in there to capture home sales that would be trending the opposite direction. But we're still reporting positive increases in home values year over year, and certainly from the beginning of the year. So the picture paints a market where inflation control measures on housing certainly are not working, in spite of the fact that we've looked at interest rates in the 7%. So now we're back a little bit lower than that now. But in spite of that reality, people are still hungry to buy homes and are still forcing themselves to make that commitment to, by the way, a long-term mortgage at 6% or so interest. And they're willing to do that because they see something in Florida. So you work a lot with investors. You work somewhat with new first-time home buyers too. So summarize for us what people see in Florida in the markets you're buying in to make them want to take what would, be classified by some as a big risk to buy homes at the top of the housing market at interest rates that are likely, capping out or as high as they will be for the foreseeable future. Why do people take the risk to buy in Central Florida?
Honestly, right now, in my opinion, it's the rent prices. They are really looking at that and saying, where am I going to live? Am I going to rent this place for $2,500, or am I going to go out and get a mortgage and pay $2,000? I think people are making that choice and saying it's a better option for me to just buy. And if they don't buy now and they're watching the market, they may never get the opportunity if the prices continue to go up. And I don't see them falling, to a drastic measure. So right now, I even kind of encourage people, you should buy. And interest rates at 6% and 7% is not high. It's higher than what you were told a few years ago when you got that 4%, 2%, whatever stuck in your head. And so people think that's high. But when you really break it down and look at the fact that right now at a 6% interest rate, and you're getting the house for $300,000, as opposed to 2 years ago when you were paying a lower interest rate, but then you were outbidded on the house, and now you got to pay $300 plus for the house just to get the house that you want. I think right now in this market is a better buy, and I think a lot of people are realizing that.
So it does seem to me too that with the demand that we have and the lack of supply, there's a potential that prices could be a lot higher and still growing if it weren't for some downward pressure from several things. We've talked about the interest rate, right? The higher the interest rate goes, the higher your monthly payment. That puts downward pressure on the price, right? The other thing that we see putting downward pressure on prices is property insurance, right? Insurance is out of control. I mean, our insurance premiums have tripled in the last 3 years on some of these properties. And it's become a situation where you're paying $400 or $500 a month just for the property insurance. And that's crazy for a $400,000 or $500,000 house. And then we've got property taxes, right? As we've seen this, really fast run up in values, the property appraiser's office is looking back. They're looking back right now at 2021, and they're capturing all that run up during COVID, and then they're going to get 2022. And so people are going to be hit with these huge tax adjustments when they go to buy these existing homes. And so they're on a $400,000 home, you're probably paying $6,500 a year in property tax. So you've got this downward pressure now coming from some of these outside things like insurance and taxes and interest rate, yet we still saw a 3% increase year over year as of March for Q1. So what that tells me is like you're saying, demand is very strong. Maybe it's coming from renters that are converting over to owners. It's coming from people moving in still from out of state. It's coming from new retirees now that want a snowbird, right? Oh, yeah. They're living in Michigan and they want to come down here and buy a home so that they can be here during the winter. We see that too. So we've got just so many positive things going on in this area that are just pushing back all this downward pressure we're seeing on price.
And I think I'm especially with the short-term rental market, that has really caused a lot of change to me. Like I've just had a guy, I just closed on a place in Gulfport, $450,000 home, and it's a short-term, it's a vacation rental just for them to be able to come down. But coming from Maryland, looking at that price, they think that's a great deal. Yeah. So what we see as inflated prices, the prices here are going up, they're so much higher. Others are coming here and saying, wow, I'm getting a lot more home than what I would somewhere else. So this is actually not a bad price.
Keyanna, talk to us a little bit more about that. Okay. Short-term rentals and what's driving the demand there. Can you share with us some of the math that people are doing to help them make that determination, right? That $450,000 is a good price to pay for a home that I'm going to rent, right? On a short-term basis through Airbnb or VRBO. And I'm going to come down and use it some myself, right? Because it's Florida and I want to be somewhat close to beaches, but the majority of the time I'm going to rent it out. Now, we do the math on some of that ourselves. We help our clients do some of that. And that doesn't always look like a home run on paper, but people still do it. So tell us a little bit about what that math looks like for your clients and explain to us why that gap exists and why people can get over it, right? Overcome that gap.
I think a lot of people are, because you're right, even for this guy, I mean, maybe max, can come out with $5,500 a month. And that's if you're consistently booked, all of that. And that's at this time of year, right? There's the off and on season. But I think for some of these buyers, it makes sense because the property is essentially paying for itself and they have a place to go. And they're looking at, I have some clients that can make up to $10,000 a month off of Airbnb with renting out the property. For a lot of investors, it is actually making sense to come down and purchase these. And once people kind of got a whim of, and I think it came out of the pandemic, people were finding places to go. They couldn't really be outside. So renting a house that your family could be in and be kind of together and safe, that was appealing. And I've seen those popping up everywhere. And I think it's a lot of word of mouth. People are telling other people. People will call me and just say, hey, I just want to know approximately, if I bought this, what would it Airbnb for? And not all the time the numbers are making sense. Not even to me all the time, but they still want to move forward. And the only thing I can think that makes them continue to do it is their potential usage out of that property as well.
Yeah, there's definitely a lot of value in that, right? And I think even owner occupants right now are finding value in these higher prices when they're going to live in the home or be able to use the home in an Airbnb or VRBO situation. Now, are you finding that these clients doing this are wanting to buy in certain areas? Like, is it Pinellas County? Is it Ybor? Is it downtown? Like, where are they buying these things?
Oh, a lot of Ybor, Seminole Heights, definitely Pinellas County, anywhere along like Clearwater. Spring Hill, believe it or not, I am finding a lot of people who are willing to purchase there. It's close to Wiki Watcher, so you kind of have that beach-ish feel, but it's very interesting, the areas even that they're choosing to put these in. Not all of them are lucrative areas, or not the best location-wise for what I think would bring in people, but they're still willing to do it. I mean, you go further out, you pay a little bit less, so you need to rent it out for a little bit less. But yeah, they're definitely coming here. I've seen a large influx in from my business, working with people who are looking like to invest. They're all over it. I've had more calls and talks about doing short-term vacation than really long-term rentals. They're not really interested in that.
Yeah.
Yeah.
Your clients that are coming in, because we have a short-term rental ourselves, and one of the linchpins of this is your people on the ground, right? Like your cleaners, your maintenance people, that kind of thing. Like, are they finding these people that will operate, away from the beaches, away from the hot areas, like, and go to a Spring Hill to provide that service?
Yeah, I mean, there are people everywhere. When you think about it, especially for me, like having a maintenance team where we have different offices in different areas. So we've already staffed for having, maintenance people or cleaners, lawn care guys that can go out, vendors that will go out to these areas. So I think, finding a professional like myself makes it easier for them to get these services going and to provide that comfort. And they go away, they don't think about it, they're good.
Yeah, VRBO and Airbnb really seem to have democratized that whole process, right? People now view it as accessible and doable, and the technology has really come alongside the investment strategy to make it feel like I can handle this, right? And so I think that does remove a barrier to entry for a lot of folks. But the amazing thing is that people are willing to put such a price premium, I think, on control and flexibility, right? Is that, if I'm viewing this as an alternative strategy to an equities account or my 401k, I can't ever go on vacation inside of my mutual fund, right? And so that's nice to have, but when COVID hit, it was useless to me. And I watched in like constant anxiety that, fearful that the value of that would plummet. And to some degree it came down. We had all kinds of volatility for a while there. Now, of course, then it kind of came back too. But yeah, the alternative is take my investments and put it in something which, could possibly have a very high up end if I manage it well myself, if I keep high occupancy, right? I project that I'll get $10,000 a month on this rental. However, kind of I know in my head, and I know that I'm going to use it some, that I probably get 3/4 of that or a half of that because of what demand looks like. But that's okay because it's a tangible asset. I can go visit and live in it sometimes. And that feels like it's worth the reduction in return for all of that possible upside and the promise that I could do better myself than my financial planner might be able to do. It's a wonderful thing that plays into our hubris, our self-confidence, and the desire for control when everything else seems out of control.
Oh, that could be a good reason why a lot of people were turning to that. Yeah.
Do you find, Keyanna, that do your investors share with you like what their metrics are for purchase? Like, do they tell you, hey, look, we're looking for a property that will yield this rate of return, or we're looking for this much cash flow to be generated by the property per month or something like that?
Honestly, at one point, like years ago, I think that was like a standard. Like people wanted at least the 8% or higher cap rate, right? They knew that, they had calculated it. I don't see a lot of investors coming in with that type of strategy that need, they're looking at, okay, well, if I pay this and I make that, it should be fine. Not considering a lot of times, a lot of the maintenance, a lot of the deferred items that are going to come with having an investment property. I don't see them in that same way.
So they're just long-term bullish on Florida, I guess. I mean, right? I mean, and I can see that, right? I mean, you fly into the Tampa airport from the Midwest or up north, and you drive over that beautiful overpass on a spring day, and you see the crystal blue water and the palm trees. And why wouldn't you be bullish on this area, right? Why wouldn't you want to buy something here, right? Own a piece of this paradise.
Well, every article says it's the best place to live, right?
Hey, and is it not?
Every article is telling you it's the best place to live. Like Tampa's the most desirable place to live. It's the best in the world. It's all of these things. So with that, people are really literally just buying into that idea, I think.
It is remarkable to me, though, as I listen to you guys talk, that you are not seeing right now investors coming into the market with an expectation of earnings, right? They're willing to invest in an idea, in the promise of an upside, whatever that is. They don't have a clear concept in their heads of what that return ought to be. To me, that spells a little bit of irrational exuberance, and that as soon as a year or so of production goes on, they look at their income after a year, and they're a little surprised now that this investment in Florida has not yielded the returns that they were hoping it would yield. Or they do a comparison to their stock market portfolio and they're like, wow, it's way down. And it's fairly labor intensive. And, I wonder if I'm getting out of this what I thought I would get out of this. I didn't even know what that was, right? So, maybe that gives them a little bit more time.
I don't think we have the traditional investors coming in. I mean, we have them, but not in the way that there once were, because prices are higher for a traditional investor to come in and say, I want to make 8 to 10% off of this. They're paying a lot more to see that type of yield. You have to have a good product to charge the rents where you're going to get that. I'm seeing so many people that are really, they're coming in just, hey, I want a place in Florida. It's a great place to live. And if I can make money off of this too, then that works out for me. I don't feel like we have those same type of real bullish, like I'm coming in, I'm an investor. This is just an investment property for me. It must produce. I have so many people, like I said recently, that have purchased based off of what the property can do for them. And it makes money too. So this is good.
So that kind of speaks to the bullish nature of the US economy over the past 10 or 12 years, right? I mean, the economy has been so good, since 2012, 2013, as we started to climb out of the recession, that people have made tons of money. Then people got all this money from the government during COVID, and maybe they're sitting back, and maybe their thesis is, because this does exist on Wall Street, that we're going to see another bottom in the S&P 500. The market potentially is going to go down another 20% at some point because of some catalyst, whether that's jobs or whatever, or whether it's because of a war or inflation can't get under control, whatever you want to subscribe to. And that the safest place for their money to fly to is fixed assets. And what better than Florida real estate to have as a fixed asset?
That could definitely be.
This is a very interesting kind of buyer, and I'm glad we're having this insight, because this is not someone who is paycheck to paycheck, who's buying in Florida, and if something reverses, then it's doom and gloom, and it's going to be foreclosure, right? Here's someone who's affluent, who can weather a storm, who is not buying it for strictly economic reasons or measurable economic reasons anyway. They're buying it as a diversification strategy, a luxury item that speaks good things about who is buying in Florida. It's likely the kind of buyer who's not going to be all that damaged by a downturn, which means that they're not going to show up as foreclosure properties, and we're not going to see the decline in values if things don't go quite right for them, right? That's a very promising picture to paint about what's going on right now.
Oh yeah, and I look at it. My god sister, she works with a law firm, and they process evictions. That's all they do is process foreclosure. Sorry. So they work with the banks. Most of her clients are banks, and so the law firm works together. And I was waiting on her a lot of times for like her projection, right? If she tells me that there's a ton of foreclosures coming, or she's got a ton across her desk, then I'm thinking, okay, so now this is when the market's going to start to turn, right? Because I always look at a lot of the people who did buy, they bought a little high. If the market changes, they're going to be the first people in foreclosure. So we thought there was going to be an influx of that. That did not happen, and it could be because of the regulations. Banks have to go through so much more to foreclose because of COVID. They've got to offer you this, that, give you the house back, whatever, and they can't foreclose. So if that's not happening, I don't see our market changing a lot. And I don't see from her that she's getting like an influx of foreclosures now.
Well, and to your point, Peter, I mean, Keyanna, correct me if you see something different, but I mean, from what I understand with banks right now, if a buyer's coming down to buy a $450,000, $500,000 VRBO, they've got to put at least 30% down. And putting 30% down plus the cash reserves that are required to qualify for the loan, they've got to have at least $200K liquid to get this deal done. So that's not your paycheck to paycheck guy. That's somebody with some significant assets typically.
Well, and you have normal buyers. I had a buyer who put out $80,000 to buy a townhouse, went into her 401k, her retirement that she had, and that's what she did. So people are pulling the money. They've got the money and they don't mind putting it down on a property. And at one point, no one wanted to put down $80,000. They're trying to figure out every way not to put down that much. But the type of people that are buying here now are a lot more liquid.
Right. They were looking for 0% financing, right? And so they wanted to put nothing into it. And that's a high risk scenario for everyone. That person has no skin in the games. They don't care if they lose their $0, right? Yeah. And it puts the bank on the hook for a lot of money because it costs them a fortune, of course, to foreclose. Yeah, I was looking while you were talking. I went back to the foreclosure dockets, and we've talked about this on the show before. They're empty. They're still empty for the next 3 months. There's nothing. Those haven't moved more than like 3 or 4 homes. And I know it takes a lot of time to foreclose, but still, I'm not seeing any sign that we have some kind of a flooded docket out there with foreclosure cases. Now, if it is the case, though, Keyanna, that there's more regulations and it's harder for banks to foreclose, then the banks are going to raise interest rates on their own volition. It's not going to be Fed driven for them to do that because it's going to be more costly for them and higher risk when someone does foreclose. So we might very well be in a market where these interest rates are where they're going to be. And, I'm speaking to that in the same way as I'm speaking to almost all price. We watch pricing come up on cars, appliances, construction materials, and in none of that have we seen a measurable softening, like a little bit on some commodities, right? But these higher prices have held their own because the market demonstrated that it will pay that much money for them. And I sense that as we're seeing high demand continue for real estate, that the lenders are going to continue to ask high interest rates because risk is a little higher in their eyes and people are willing to buy anyway.
Yeah. They don't have a reason to change that right now. It's actually working because people are continuing to buy. And I don't want the market to slow down, I want it to keep going. Of course, I'm a human. I have a heart. I want it to be fair. Some people are just like, oh, you never can buy, right? Because the average price home is $400,000. Instead of at one point, if you bought a $250,000 home, you had a nice home. That's not the case now. Now that's an investment. That's a tear down. That's, something you're rebuilding. And the average person can't take on that type of task, to purchase and then rehab. So those are kind of being left, but the larger investors that come in, they could pick those up without any thought. They're like, yeah, we can take it. They're not even looking too much into, like I said, the numbers. They're like, it's in Florida. I'm going to do well. This is going to go up. There's not a lot of strategy, I think, that's going into some of the investors that we're seeing coming here because they're not true investors, in my opinion.
So, Keyanna, what are you doing with this new type of investor that's coming to Florida? What are you doing to cultivate relationships with these types of people and to build relationships that will last over time so that they view you as their trusted advisor on these investments? And do you manage these investments for them?
Yes, doing a lot of management for them. I focus on showing them, especially when they're they're not number specific and number driven, showing them the benefits of Florida, of living here, showing them the market, showing them the rates, even if it's Airbnb, showing them how high the nightly rates are here. If it's a long-term rental, showing them that it's that. And also I show all of my short-term clients the potential to transition to a long-term rental, because long-term you can get a more stable price. So I'm always looking that one day, because I don't know how hot Airbnb is going to be forever, right? They have their issues, platform stuff, all of that. But I always look to potentially turn that into a long-term rental.
Yeah, that's good. You got to have options, and that's the beauty of real estate, right? It's like, there's so many different ways to generate cash flow from a property. Airbnb and VRBO presented us with a whole new paradigm and how to do that over the last few years, and people have become confident in that business model. And it's a great thing. And so much of that depends on location, and your price point. And if that works based on purchase price, it can be a really good thing. It's been a good thing for us over on the beach. We've had really good success with the one short term that we own.
Oh yeah.
So Keyanna, this new investor, it's called the new investor, right? The new investor. Are they bringing is that same mentality coming into the long-term rental sector, right? So we've talked vacation rentals, and I can understand that a vacation has kind of like a trophy property idea swirling around it, but like a duplex or a small multifamily property, the investments that we worked on together when we back in the day, is that new investor buying that kind of property with the same unbridled, that disconnected from financials strategy, or is that investor still very much financially driven?
That investor, they are financially driven, but let's just say I sold a duplex a month ago, and actually, you guys may even remember it. It was over on Anthony, and that street was kind of like a lot of little duplexes. The guy who bought it, plan was to live in one side and rent out the other side. Still, to me, not a solid I'm an investor type plan, but he's buying what essentially is an investment property, but not looking at going in rehab and really getting that at the top rent rate. He's like, I'm going to live in one side, I'm going to rent out this other side. To me, that's still like a new investor mentality, and someone who's coming maybe from up north who are used to two families, and that's their way of investing, right? I buy something, rent half to myself, half to the other person. I'm not encountering a lot of those true, I need to know the numbers or this doesn't work. Now, of course, on the sales side, they want to look to get the best deal possible. But honestly, I feel like with this particular duplex, for the amount of work it needed, it still sold a lot higher than I would have anticipated it selling for.
Yeah, I've been really surprised at what some of these duplexes have been selling for recently, especially in some of the rougher areas of town. I mean, it's almost like this new investor is like, I've got to have multifamily. I don't care where it's at. If it's a 2-1 duplex in the middle of the hood, I'm good. I'm going to live there.
Have you guys looked at the prices in Sulphur Springs lately?
300, what, 350 for a duplex over there?
Right. You know, and if you looked at that, and I'm having to adjust as a realtor, right? Because when they come in and they say, I'm looking at this, I have to remember, I'm not even in the market I used to be in. So 300,000 there is actually a good deal,
Yeah, because in 2000, Peter, what was it? 2006, we bought Maple Street over there. We bought a duplex in Sulphur Springs on Maple Street for $105,000 in 2006. And at that time, that was top of the market.
Yeah, we were overpaying, Chase. Yeah, we thought we were overpaying for sure.
And we couldn't keep it rented.
And now, if you still own it, look at what you're able to sell it for now.
Well, unfortunately, whoever bought it didn't get it out rented out fast enough, and they turned it into a single family home. But
and that another thing I think is affecting the area, the new construction builders who are building brand new construction rental communities.
Oh yeah.
like I've been seeing quite a bit of that, and I've found that very interesting that somehow became a business model for a lot of these larger corporations. Like, hey, we'll build these new houses and then we'll rent them out.
Yeah, American Homes for Rent is building one right in Tim Royer's backyard, actually. And up there near, what is that, Quail Hollow? Yeah, right there off of, what is that, Old Pasco Road?
Yeah, they have another one off of 78 and like Palm River area.
Oh, yeah.
Where they built one. I mean, I went to a whole community out in Zephyr Hills where they're all rentals.
Yeah, D.R. Horton just built a whole community of townhomes right around the corner from me that are all rentals. There's probably 60 or 70 townhomes in there. They're all rentals.
Well, they're not. I'm curious as to what you guys think, where that business model came from, or the long-term idea with that.
Well, in my assessment, it is, again, a business model that's being driven by optionality, right? We know that it's not going to yield the kind of rates of return that we think is reasonable or appropriate for a cash outlay in its rental strategy alone. But it certainly will sustain itself for the near term, and then we'll convert it into a sale property, right? Yeah. And then it will be an established sale comp at some point in time. We have lots of different exit approaches. We can exit with the entire community to a pension fund who wants to spend $30 or $40 million on a stable apartment-esque rental property, which this could be viewed at, or we'll sell it to individual home buyers at one point in time. If you look at this as having multiple exit opportunities and multiple income opportunities, then I think you can favorably muddy the waters for your investors and for your investment review teams, because you can put in so many different moving parts that
it looks like a good deal.
It looks like it might be a good deal one way or another, right? So,
well, it's encouraging
to be part of it.
Yeah, and I'll just add to that. It's encouraging to see like a builder like D.R. Horton, who's a publicly traded company, who does not have an investment thesis centered around rental property. They are churn and burn builders. They're get a house out of the ground in 3 months, sell it for cheap, don't give anybody any options, and be on our way to the next community, right?
Right.
The fact that they're entrenching themselves in a rental community tells me that they are also very bullish on this area long term, because they wouldn't be doing it unless they thought they could sell it for a whole lot more money at some point in the future.
So this week, my family is in town, and they're from the Northeast, and so we drove through they were riding with me to take my kids to school, and we drove through Sulphur Springs along the way, which just happens to be there was less traffic through some of those roads. Let's put it that way. So I drove through, and it was amazing because my sister lives in the Boston area, Boston suburbs, and she was driving through and says, "This looks lovely. It looks very nice." And I'm like, it is one of the lower end parts of town, lower priced parts of town. And she's like, you wouldn't know it from looking at it, right? And that's her perspective as she drove through it. And I think we're forgetting that when you drive through 100-year-old communities in the Northeast in wintertime, they look ugly. You and I look at them and say, look at that beautiful New England architecture. The New Englanders look at them and says, this place looks so run down and so ugly, and look at all the falling down houses. And they come to Florida to an area that we think looks run down and falling down, and they think it looks so much nicer. And I certainly think that we have irrationalities like that heavily influencing Northerners.
Absolutely. I mean, I look at people that come down and I meet them and I think, oh, they won't want to stay in this area. And then I'm showing them houses and they're like, oh, this is not that bad. They're like, oh, we're used to seeing crackheads on the corners. Pardon me for a better word, Yeah. They're used to what I would say a mixed maybe environment. Some, especially ones I get from New York, they're like, well, yeah, we've had to walk through this to get there, or this. It's not that bad. And yeah, we look at that area, and I think I would never. I mean, I don't think it's nice in any kind of way, But it's not for me to like, and it's just for me to show you. And if you think it's comfortable enough for you and you want to live here, or if it's an investment and you're not living there, then you definitely think it's okay.
Yeah, everyone's got a different perspective. And that's one of the hardest things, I think, as a real estate professional, especially someone that owns rental properties or has managed them for a long time. to make sure you don't try and project your preconceived notions or your ideology or paradigm upon someone else who sees value or sees an opportunity in something that you would run for the hills from.
Right.
And I have a challenge with that all the time.
Me looking at the prices of properties in the areas, I am often quieted because, of course, I can't say what I really think about the area, because I've watched it be what it is for all of these years. But a lot of people do not have a problem with that. I really think, at one point I used to convince investors, hey, you're not living in this house, right? So it doesn't matter where it is. It's okay. This is just a rental property. You're going to make, great money off of it. It'll be fine. And now I'm like, wow, you're okay with purchasing a $300,000 home here. I could not imagine doing that, but hey.
Well, the $300,000 home here was a $150,000 home 10 years ago, right? And I think that's just the basic compounding effect of an investment that is rising at a reasonable annual rate, somewhere in the 4 to 6% mark. Over the course of 10 years, you're going to see the value of that, the sticker price on that double. And I think any of us who linger too long in a market can suffer from that kind of bias, right? That we just can't believe that our home would be worth 2x of what it is today, 10 years from now. It's why when you talk to the average boomer, they're telling you like what they paid for their home 20 or 30 years ago, and you're shocked and they feel like they've hit the jackpot. But that's what's supposed to happen to a house over 30 years. You pay $80,000 for it, and then 30 years later, it's worth $600,000. Do the math on that. That's kind of what that math looks like if you hold on to an investment long term. So we all need to just, I think, step back and realize just the financial reality there and be okay with that, because 10 years from now, these $300,000 homes in Sulphur Springs are going to be retailing at $600,000. Can you handle that? Right? Because it will be that way. And we're all going to be trying to talk our clients out of buying those homes 10 years from now if we're not careful. Right.
Right.
Well, we'll be California at that point, right? Maybe they'll have to put a Ferris wheel and a pier over there on the river next to Rowlett Park.
Yeah, then there you go. Now it's a more desirable area.
But California deals with this exact reality, right? They're slums, they're low-income properties, relatively. I'm referring to that pejoratively, of course, because they're not slums. They're $600,000, right? So I think what you have is that everyone, all these people who come from more mature markets than ours, realize that this is the reality in Florida. And maybe they look at this and think to themselves, less risk exposure than my market, because I can come in at a lower dollar outlay. And if I've got to put less money on the line and I'll experience the same relative growth rate over 10 years, I'd rather go to a market that's not yet fully mature. Florida is not mature. We have a lot of room to grow and go in order for us to be the equivalent of a mature West Coast or Northeastern market. And so I think people still say, hey, I can get in there for the value of my 401k, right? Whereas they don't think they can do that in their local markets right now.
But if we're seeing like the type of growth here that we're seeing, why isn't there more there's a lot of new construction that's happening, but why isn't there more? Like if you think about what was happening before the last crash, they were putting out new properties, communities, I mean, so quickly, and I don't see it happening in the same way here yet. We have all of this demand.
Yeah, one of the challenges we have specifically here locally, and we talked about this a couple of weeks ago on another podcast, was infrastructure. And our local governments, especially here in Hillsborough County, the county commission has put the kibosh on so much development, especially in South County, in Ruskin, Waimama, Apollo Beach, because they can't even get clean, drinkable water down there to the existing homes, much less to another 200-300 home development. And so the county has got to catch up with their infrastructure. We need more schools, we need more roads, we need better roads, we need hospitals, all that stuff. And we just weren't prepared for this kind of demand. I mean, who really was? I mean, I don't think anybody forecasted this. And, COVID obviously played a key role. But we've been growing pretty quickly for a long time, just not at the kind of rate we've been growing at over the past 3 years. And so they're going to have to catch up if we're going to have any possible chance at meeting the demand on the supply side, because really the new construction, new builders, that's our only hope of doing it. And Pasco, has done a little bit better job up along the 54, 56 corridor. Mm-hmm. But if you've driven that road lately, they're almost tapped out. So, there's a lot of municipalities, a lot of counties around here that are struggling, trying to figure out how do we accommodate all the people that want to live here.
Development is most certainly the answer, right? Because, if demand is growing and population is increasing, well, existing construction doesn't reproduce itself, right? New construction has to come on the scene to provide inventory for people. And, and I'm okay with constrained supply. I mean, I think we see that kind of thing all the time in desirable product sectors, right? People constrain the amount of new cars they make or certain luxury product or clothing lines because they want to keep prices artificially high. They want to keep interest peaked from consumers. They want to have an air of exclusivity. And so I don't think any of that was deliberate here. I think regs and I think just COVID and the fears surrounding it really has slowed down construction to the point that it's well below where we need it to be in order to meet demand. But the side effect of that is Florida has a cachet now that it's never had. I mean, can you imagine that here we are years after COVID, where everyone else is like projecting still decline, but we still have product that, where their demand is so high in new home communities that they can't keep up with it from a supply standpoint. We still have prices that are up substantially year over year. Everyone still wants to move here. And as soon as a decent home hits the market, it goes. All of these things are such desirable things for a market that I think I'd rather that than necessarily a deluge of available inventory.
That's true, because I mean, there's not a whole lot sitting on the market, although I see, I was excited when we got towards the end of last year where, you were seeing houses that were actually making it to 30 days on the market, right? Because that was at one point not happening at all. Fighting against 20, 30 offers is not happening in the same way, although I did experience it recently, which I said, okay, something's happening here because this house has 14 offers, this one has 20. But that's in the $250,000 price range, which affects our first-time home buyers. So our new investors are coming in with their money. They can buy. Our established homeowners are moving up to, a bigger home, and they can do that. But the people who are coming in as first-time home buyers, oh my God, they're getting stopped left and right. They're not able to afford a $400,000 mortgage starting out. And there is not a lot that is around that below $300,000 range.
Well, I know what happens in California is that parents who have owned their homes for 30, 40 years, these boomers, and they've got several $100,000 of equity in their home, they take out home equity lines of credit to give their children down payments on their homes because their children are in the same boat where they're having to go out and buy a $400,000 or $500,000 home because that's the cheapest thing you can find. And the only way for them to qualify is with a significant down payment. Mm-hmm. And it's the parents and that built up equity over 30 years that has to step in and bridge that gap for them. And so maybe that's what we start to see here in Florida, is that the generational wealth is passed down through down payments for first-time home buyers, because that's about where we're headed from an affordability standpoint.
Yeah, I mean, let's hope that starts to happen. I haven't run into a lot of parents who are like, yeah, let me refinance and let me give you the money that you need, to purchase. Although I had one, and her dad's like, well, I'll give her $100,000 because in her price range she was finding absolutely nothing at all. But if more of that happens, that would be good. They're the only group that I'm really worried about. It is just, the first-time home buyers.
Yeah, so it's going to come. through discomfort. There's going to be pain somewhere in this process. And I read recently that 50% of millennials, of Gen Zers, really, possibly of millennials, aged between 20 and 30, are living at home still. Right?
Oh,
That is not what most Gen Xers or boomers thought it would look like, right? To have a kid out of college, like still living with them. So at some point in time, I think that Gen Xer, that boomer says to themselves, right? I mean, like if they want freedom for their child, they want their child to start availing of the same opportunities they had. It's going to be more than just paying for their education. It's going to be helping them with a reasonably solid down payment for a house too.
Yeah.
And that's likely to happen because no one really wants to live with their parents forever.
Well, a lot of them are.
You're having to, right? For sure.
Well, they have no choice. I mean, and that's not even for just the Gen X. I mean, some of the older generation are having to go back because they can't afford the rents. And if they don't have the money to put down, then they're back like living multifamily. Like I've seen since the pandemic, so many people go back to living like in group living because it's the most affordable option. Either they're scared to buy, don't have the money, don't have the credit. There's something holding them back. But I've been seeing a lot of that.
Well, now the cities are allowing them to build these in-law suites in their backyard, right? So I think Tampa and St. Pete are allowing you to build like a cottage in your backyard and have a second unit. So maybe that's going to fill some of the gap. I don't know, but
a lot of tiny homes, I think, may start coming up.
That's possible. That
could be the next thing.
It'll be creative. No matter what, it's going to be creative. Someone's going to come up with some solution that we probably didn't think of.
Well, Mrs. Real Estate, this has been a fantastic conversation. Just a true delight to reconnect with you, and great to hear about some of what you have to say about the housing market. Where can people go to learn more about you?
You can follow me on social media outlets. I have Facebook, Keyanna is Real Estate. Instagram is also Realtor Keyanna J. You could find me on there. I also offer first-time homebuyer counseling. So I have my website, savvybuyersppc.com. You can schedule a free consultation to just ask me questions on the market, on buying, on processes, terms. My goal is to educate as many people right now. And to get more people out there and encourage them to buy.
I love it. And Chase, always great to chat with you too. Looking forward to greatness, great things from you, Keyanna, hear more from you in the years and months ahead. And we hope the market turns around in all the positive ways that we discussed today on the call.
Yeah, great to reconnect. Wish you all the best.
Yes, thank you. It's a pleasure.